Hi, and welcome back to the Food Fund, where we analyze investing in food, beverage, and restaurant stocks. In this video, we will be evaluating the portfolio performance for March 2025. Spoiler alert, we beat the S&P 500, so stay tuned to see how we did it. Before we get started, please click the like button and let YouTube know that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. Your continued support means so much to the Food Fund. Now, let's get started. Cue the logo. Let's start off with the market's performance. For the month of March, the S&P 500 fell about 4.1%. The downtrend that started in February continued, and it was painful. When we look at the one-month return for the companies that make up the S&P 500, we can see a lot of red. Clearly, March was a pretty rough month for most companies. All of the big tech companies like Microsoft, Nvidia, Apple, Amazon, Alphabet, and Meta fell. However, over in our corner of the market, non-alcoholic beverage, consumer packaged foods, alcoholic beverage, farm products, and confectionery companies all gained, while restaurant companies fell. Value food stocks finally held against the larger volatility of the market. Okay, let's move on to the portfolio performance. I deposited $100 into the account on March 1st, 2025. And at the end of the month, the portfolio balance was $893.36. This means the portfolio gained $33.86 for the month, representing a 3.9% gain for March. Finally, given the S&P 500's negative 4.1% return, we actually gained 8 percentage points of alpha by investing in the food fund instead of the S&P 500. So far, we have beaten the S&P 500 only 2 of the 9 months the portfolio has been active. Looking at the chart, we can see that the portfolio is finally turning upwards toward the S&P 500. Let's hope this trend continues, and we can finally say that we have been beating the S&P 500 since inception. Since inception, the portfolio has had a negative 0.6% return on a money-weighted basis, while the return on a time-weighted basis was negative 0.7%. Given the S&P 500 2.5% return, we lost just 3.1% of alpha by not being invested in the S&P 500 since inception. We are slowly making progress towards beating our benchmark. Now let's look at the portfolio moves for the month. First, I bought some Wingstop on March 3rd, bought Kurasushi on March 6th, bought Chipotle and more Kurasushi and Wingstop on March 7th, bought more Kurasushi on March 11th, bought more Kuka-sushi and Wingstop on March 14th and also received that Sweet Hershey dividend, bought Chipotle and Pepsi on March 24th, bought more Kurasushi on March 28th and also received that tasty Wingstop dividend, and finally bought more Kurasushi and received the Pepsi dividend on March 31st. I focus heavily on building my restaurant positions this month. Let's look closer at some key holdings. Celsius remains my largest holding, with 6.59 shares at a cost basis of $32.08. This position is finally in the black, up 11%. Celsius makes up 26.3% of the portfolio and will only increase if the share price continues to rise. I have stopped buying since last month in an attempt to reduce some of the overweighting. Though I am probably more lukewarm on the Alani Nu acquisition than most Celsius shareholders, I do see a bright future for the company. I am just a bit worried about getting through the rest of 2025 unscathed. Next, let's look at Wingstop. Wingstop remains my third largest holding, with 0.61 shares at a cost basis of $278.70. This is my worst performing position, down 19.1%. Wingstop makes up 15.4% of the portfolio. In my opinion, valuation for the company still remains tricky. What is undeniable is that the fundamentals remain strong. Perhaps surprising to most is that I have been building my Kurasushi position, with 0.75 shares at a cost basis of $53.26. The company is down 3.9%. Kurasushi makes up 4.3% of the portfolio, up from 1.6% of the portfolio last month. Kurasushi, once my best performing position, finally fell back down into my buy range, so I decided to scoop up more. As a whole, my portfolio is really being held together by the recent Celsius gain and my small but strong coffee shop positions. This month I was much more conservative and only deployed just under half of my monthly deposit. At the end of the month, $56.75 remained. As far as the weighted average metrics for the portfolio, revenue per share growth and free cash flow per share growth were improved from last month. Cash conversion cycle, net debt to EBITDA, and yield on cost were worse, while gross margin and return on invested capital remain unchanged from last month. The end of the first quarter of 2025 is here, and that means a new round of earnings reports incoming in April. Notably, Kurasushi reports on April 8th. I do expect to see continued, healthy market share growth, though margins may continue to have a tough time. Elsewhere in the food market, some restaurant companies are putting together strategies to manage the tariff tempest. A recent article from MarketWatch details the approach as shared by investment bank Morgan Stanley. Risk mitigation strategies includes a combination of pricing power, currency hedging, the ability to redirect products to markets without tariffs, stockpiling inventories, and diversifying supply chains. Larger restaurant companies, such as McDonald's, Domino's Pizza, and Yum Brands operate in multiple markets and may be able to hedge the tariff effect by raising prices domestically and shipping excess inventory abroad. Still, the food industry will survive this impediment to growth as it always has. Many thanks for watching. What do you think about the portfolio? Share your thoughts below. It is always great to hear from you. Please check out some more videos right now, and don't forget to put your money where your mouth is.